Hello everyone and welcome to Chinese Stocks channel 中国股票频道. I'm Michael and today's video is about the second largest B2C retailer in China. Today's video is about JD.com. So JD.com third quarter earnings are coming next month in the 16th of November, and I expect big moves in JD stock in the coming month, and so I decided to share my thoughts and insights with you. For those of you who are not familiar with JD.com, this is one of the most successful B2C business-to-customer e-commerce platforms in the world, with more than 417 million users. It's the second largest B2C retailer in China after Alibaba, but the largest one by revenue. The competition with Alibaba and the belief that Jack Ma's giant can be the only dominant player in the e-commerce sector in China made lots of investors very pessimistic about JD and its ability to compete with Alibaba. But I'm here to argue that it's not Alibaba that challenges JD, but rather JD that is faster growing and challenges Alibaba. JD currently has the largest fulfillment infrastructure of any e-commerce company in China and one of the largest in the world. Unlike Alibaba that relies on third-party delivery companies, JD has its own logistics company, JD Logistics, that is able to achieve rates of approximately 90% of orders delivered the same or the next day, a rate of fulfillment that no other e-commerce company in the world can currently match. For more in-depth analysis about JD.com, you're welcome to check out my previous video about the company, in which I dig into its business model and its future plans and how JD is challenging Alibaba. So in today's video, I'd like to share with you my thoughts about what's going to happen with JD.com and its stock in the coming month. But before we start, I'd be more than happy if you hit the like button and subscribe. It helps the YouTube algorithm and will make it easier for me to release more content about Chinese companies and their stocks. So JD.com is expected to release its third quarter report in the 16th of November, but an even more exciting day is going to happen a bit earlier on the 11th of November with China's biggest e-commerce festival, Singles Day 2020. The Chinese government published very positive numbers of growth in the last few days, claiming that the Chinese economy recovered and grew by more than 4.9% in the last quarter. China is currently the only country in the world to see such positive numbers of growth so far in 2020. Since pandemic started in China in January this year, China saw a huge uptake in the use of online retail. In the last few years, online shopping became a standard in China, but the pandemic made it grow even faster. In last year's Singles Day in 2019, China's top e-commerce retailers generated more than $68 billion in revenues. JD.com accounted for around $29 billion and Alibaba for around $38 billion. In a year of pandemic, just like in the West, growing number of Chinese faced unemployment or have a more cautious spending habits. Singles Day is the perfect reason for them to make their necessary purchases in discount. In a normal years, travel platforms like Ctrip, the equivalent of Expedia or Booking, would also have nice discounts and promotions on their platforms. But well, in a year when people are not that eager to fly and many countries are still closed, those customers that once used to spend this money on traveling are more likely to buy products on JD or Alibaba platforms. Another reason for this Singles Day to be an outstanding one in my eyes is that JD delivery infrastructure is just getting better and better with time. Until recently, many Chinese villagers couldn't enjoy the fast delivery of JD. They would make a purchase online and the package would arrive at their village delivery center. From there, the customer would have to pick it up. Today though, JD is able to give a two-door delivery service, making online purchasing much more appealing for village residents. If we take into account that rural population accounts for around 40% of the Chinese population, we understand that JD's numbers in rural areas are just going to continue growing. It is believed that by the end of 2022, JD would be able to arrive at every Chinese citizen door, even in the most remote and isolated villages in the country. So until now we covered Singles Day and why I see it as a catalyst for JD short-term growth. But there are other two catalysts that are going to affect JD and its stock in the coming month or two. And those are its planned IPOs of JD Health and JD Digits. JD Health, that was established only a year ago, is already the largest online retail pharmacy by revenue in China. The platform specializes in the sales of pharmaceutical products, medical supplies, vitamin supplements, and traditional medicines. JD Health has more than 72.5 million annual users and recently announced it generated more than $1.3 billion in revenues during the first half of 2020. This is a 76% year-on-year growth. As of June 2020, more than 150 million users had purchased products on the platform or used other healthcare services. JD's online marketplace has more than 9,000 third-party merchants offering same-day, next-day, or even in 30 minutes on-demand delivery services. Those services currently cover more than 200 cities in China. The platform also offers telemedicine services with more than 65,000 in-house and external doctors. In the first half of 2020, JD Health had an average of approximately 90,000 daily online consultations. A part of products purchase and online consultation, the platform also allows users to make appointments in offline hospitals and clinics and pay for services such as general physical exams, aesthetic medicines, dental care, and vaccination appointments. Now, Chinese vaccine is already available and China just started its mass vaccination to its population. I expect many people going on JD Health platform making appointments to get the vaccine, and this would eventually reflect on JD Health coming quarters revenues. Now, the pandemic is a temporary factor for using JD Health platform more frequently, and that will eventually affect JD and JD Health in the coming few quarters. But what about when the pandemic is over? Well, let's have a look at this chart. The Chinese population is getting old. Today, more than 17% of the Chinese population is above the age of 60. And in 2030, this number would be around 25%. That's more than 350 million people, just like the population of the USA. When people get older, they normally encounter more frequent health problems and need more medicine. And so JD Health is riding one of the fastest growing segments in China. So, as we can see, JD Health is well positioned in this new and exciting online health retail market. But another exciting fact is that JD Health is also the biggest health platform in China by revenue and the only profitable one. Alibaba Health and Ping An Good Doctor platforms are two of JD Health's main rivals. But although being in the market for a longer time than JD, both of them are still unprofitable. JD Health is looking to raise more than $3 billion in its IPO in Hong Kong Stock Exchange for a valuation of around $12 billion. So this was the first IPO that is probably going to take place in the end of November, and I will make sure to share the exact date with you once it is published. The other anticipated IPO is the IPO of JD Digits, JD's financial unit. JD Digits reported a revenue of $1.54 billion in the first half of 2020, and it's meant to go public in Shanghai Stock Exchange probably in December. So as you can see, the coming month or two are going to be huge for JD. While some of those news are already priced in JD's current stock price, I believe that having great revenues in the coming Singles Day, revenues that will top last year's $29 billion, are likely. And those numbers will show the world that China is officially back. As per the third quarter earnings release, I believe that we will continue seeing strong numbers just like in the second quarter. And the two upcoming IPOs are going to be the cherry on top. It would be very hard for Wall Street to ignore an unforgettable month of JD, and they will ultimately have to set higher price targets for its stock. As I mentioned in my last video about JD, in which I analyzed its business and financial statements, I see JD as a very attractive company with multiple growth vectors that can double in the coming few years from its today's current price of around $82 a share. So this was the bullish side of November. Now let's see what can go wrong and what can make those predictions blow up. And the answer is one, the answer is Trump. So yes, the US elections are going to take place in the 3rd of November, and it seems like the stock market already priced in the winning of Biden. Biden might be a bit more tolerant to China and might stop TikTok-style battles with Chinese companies, giving tailwinds to Chinese stocks growth in November. But if Trump will get elected, JD stock as well as other Chinese stocks are probably going to see red days and even weeks. I myself invest in JD. Nothing in this video though is to make you buy or sell its shares. I'm not a financial advisor and my predictions can get totally wrong. Before you decide to invest in any stock, make sure to make your own research. So that's it for today. Thank you for watching. If you like this content, please hit the subscribe button below. Give it a like, it helps the YouTube algorithm. See you in the next video. Have a great day.